Hey there, keen traders. The week is over and it could come soon enough. The euro and the Great Britain odd has been a beast this week, at least last Thursday and Friday. Can't make up its mind, and it's sucked me into two of those trades. Not happy about that. But it is what it is. The month's over, quarters over. I'll put everything up on the blog in a little bit. Let's go through though and take a look at what is more interesting, and is this Euro USD trade that I talked about yesterday. Not in this trade, just showing how we could trade these larger swing moves in the short term. But I will get into it on the jump back. What we were talking about is originally the pair broke above the 137.10 level after the FOMC and then began to roll over. I'm pretty disappointed because I did actually. I think everybody in the world saw this happening here. And so a lot of traders went short around this top of this area. Everybody will say they went short around 38.20, but that doesn't matter where you actually went. As long as you went short above this 137, well, it doesn't matter. If you went short around this, let's just for argument's sake here, you went short around this 137.50 level, and we had to push down. We already talked about that. You remove your stop. Your stop would be here now at the top of this range at 137.35, and you're just going to basically ride this down lower, looking for 50 fib back moves to get into more and more and more. So right now, though, you're coming up to a resistance, and this would be the opportunity right here where we could probably have a move back. And when we get that move back, we're going to look at the fib levels to tell us where we're going to do it. You could do it as simple as that, do a fib just yesterday's move or just combined move and get in at 136.08. I don't like that. That's way too much. What I would look for is the entire move here, and it gets you in around 136.55. So that's what I'm going to set. I'm going to change the order that I had set yesterday to get in at any move up to 136.55. I'm going to write this down right now. 136.55, and we can see that our stop is going to be right above there around 137.35. So, and what we'll be looking for is still a continued move down towards this 133 level. If we get a break of this 134.50 level, that definitely could we could see that in the cards. And the reason we're looking for that 133 level initially is that is the 50 fib from this entire move, and it also is where the gap is from this move higher. Now, if we want to look at the other pairs, we can see the Great Britain is firmly below, and it is hitting this resistance range, and it's a large range between 158.75 and 157.50. If we wanted to do the same thing, you could do the fib there for a pullback, but I wouldn't, because this doesn't. I mean, let's take this out now. This trend line, and I mean, basically all we do is we have the pair in a larger range here, just sitting between this 158 and what 162.50 level, and so we can just we can right now right here. That's just basically where the pair wants to be. So I'm not sure that we have a change of momentum or a change of push there. Basically, this move lower is just pretty much figured out onto the Euro USD. So if we look at the other majors like the Aussie, you can see it's broken that trend line. Now this could be a trend here where we had the break. So what we could look for in this pair would be a move. It's a very slow moving one. You'd look for a move back up towards the 50 fib of that broader move, and that's where we could load back in. And I mean, if you had to look at this cross, you could expect the moves to go much further. Let's see, what 195.9588. And if you had to look for where you thought this move could possibly go, your first likely target would be the 50 fib of the broader move, which I'm betting will be right around that 92.90 level. Let's take a look. Bam, right there. Look at that. Isn't that weird how these things work? Well, right there at the 92.95 level, and that's where you could find definite support. So if we did get a pullback towards that 95.88, I'll keep my eye on that. That could definitely be, once again, be another opportunity to try to get the larger pull. Now, I'm not saying that these trades are definitely going to stop at that 50 fib level. That's just where people are going to look. Like if you see here, we have the gap here also, so we might even track down to this 92.30 level. We can keep our eye on that. So we're going to keep a lookout in the Aussie also for a push out towards the 95.88 level. Let's just take a look at a few of the other pairs. New Zealand, no real trend there. Yen, we know there's no trend there. Euro JPY sitting right here at this trend line support, so that'll be interesting to watch. But the pair did manage. Let's see. What do we have a high there? High of 31.50, and we have a high there. I think it's like 51, right? High, no, so the pair has drifted back down lower, and we get a break of that trend line, then we could have a range looking for a pushback lower in that pair. Let's see if we have any other trends. We all know for a fact that there is no trend going on in the Great Britain Aussie. That pair is giving me a heart attack this week, just breaking back up and down on this 168.90 level, and we're getting pretty much the same price action in the New Zealand, and I guess that has to do with the fact that the pound is breaking down, but the Aussie and the New Zealand can't really decide what the Aussie and New Zealand crosses can't really decide what they're going to do. Now let's take a look just at the setups that we had today. We don't really need to look at the JPY crosses because nothing really came into play. We had the breakdown lowers, never came back up a touch. It was kind of disappointing in those pairs. But if we look at there we go. If we look at the Aussie, Great Britain Oz pair, this pair looked like a peach of a setup. I was pretty excited about this one. I mean, this is textbook. Came back down, we hit the 50 after we consolidated there for a while, and this is the wrong 50 fib line. You can see, came back down, hit the 50, there we go. Came back down today, hit the 50 fib. We even waited for it to break below that, because when I get up to European Open, it's what, 4 o'clock in the morning, sometimes 3. So when I get into these late hour tradings here, I have alarms set up around the 50 or sometimes the 0.618 fib if I feel like there's going to be a push through, looking for a break lower. And that's exactly what I did here. So when we had the push lower, it woke me up, and we can see that the went long. I think it was 168.284. It looked pretty good originally. One up, and then the bottom just fell out once again. And you can see the pair went up and tested the 50 fib once again. Basically, this pair has been a nightmare the last few days, just chopping up, and this really has no direction right now whatsoever. So it's going to be stay sidelined at that at the current moment. Now the Great Britain New Zealand, this pair, same thing. Looks like a hell of a setup if we kept the past fib level from the day before. You can see in this cross that the pair just went down, and it was very similar. I mean, you could have got sucked into this trade just the same. You can see that the pair was just consolidating here, and what I was looking for was a pullback, and a pullback to the level, and then I could go short. And I mean, I guess we did get a 10-15, but I wasn't about to take that. So you can see that you could have been sucked into this move where we had the tap. But the reason I didn't get into that is that the obvious trend right now is a slow grind lower. So I'm not about to take that. I wasn't about to take a trade that was going to shoot to the upside. So all in all, disappointing week. Thursday and Friday at least. And month's over. I'll put everything up on the blog and look at the quarter results too. Everybody, have a great weekend. I'll keep you definitely updated on the Euro trade and the Aussie trade for the 50 fib pullbacks. That could be the ways. Swing trading could be the way to go here. I mean, the way to go if we're going to continue to have these choppy markets in these New Zealand pairs, in New Zealand and the Aussie pairs, and I guess the pound in general. But it would be great if we do just keep having this sort of volatility, because that would make everything really easy, and we can start logging in quite a few pips. Everybody have a great weekend. See you guys Monday.